Okay, we are recording this webinar just in case you would like that recording, and we're going to get started. Wow, just let's kick this off. Steve, are you ready to roll?
Ready, ready.
Okay, just doing one last audio check. Welcome to the webinar. We titled this "What the Health is Going On," and when the suggestion came forward for this title, I had this kind of visceral reaction to the title. I know Steve, you did too. But I think in retrospect, after the last couple of weeks, the title is very fitting. And with us today is the CEO and co-founder of a company called Alkali Insurance. And many of you are clients of Alkali, and some of you are just now hearing about Alkali. What Alkali, their culture is just very fascinating because they approach the insurance marketplace from a very different perspective. It really isn't about really what we can sell. It's really about how we can serve. And so you're going to be hearing from Steve, and he's going to try to help explain what the health is going on. But to set that up, I'm a big believer in quotes helping to kind of ground perspective. And this is a quote that I have taped to my wall to remind me of what's really important. And it's from a guy named Joey Riemann. And Joey says, the force of gravity pulls things down. The force of purpose pushes things forward. And when we go through a change of this magnitude, like the Obamacare legislation that was passed and the corresponding changes in the insurance marketplace, it's really easy to allow the force of gravity to pull your attitude and your thoughts downward. And I know as a business owner, that has certainly been the case. I found myself frequently frustrated with trying to understand and trying to untangle, and in some cases feeling misled, and in a lot of cases just feeling confused. But the second part of the quote is what really matters, and that is the force of purpose pushes things forward. And I really do believe everything happens for a reason and everything has a purpose. And I may not understand it at the time, but if I'll just kind of let that universal flow work, and what I believe is, a higher calling and a higher hand at work, if I'll just let that unfold, a lot of times down the road, things make a little sense. And in the case of our speaker today, I think you're going to find not only today's webinar to be incredibly informative, but I think you're just going to kind of hear the heart and soul of a fellow business owner who's really trying to serve those of us that are impacted by this legislation and by the corresponding healthcare marketplace changes. And that is the founder and CEO, co-founder and CEO of Alkali Insurance. And Alkali they really care about the changes and how they impact you, and really are dedicated to serving their clients. And I think, serving the local marketplace. I know Steve speaks a lot at universities and business clubs on, what these changes are. And it really, every time I hear him talk and really hear his passion to really understand and to help people untangle it, I'm just once again enamored with who he is as a person, and really kind of what his company is all about. So, Steve, why don't you just kind of kick things off here? I think the topics that we've outlined, 5 topics. One of the biggest questions is a lot of us got letters from our insurance carrier, basically with this kind of odd language about non-renewal. And, I know I was kind of like, what the heck is going on here? And can somebody help explain this to me? So we're going to talk a little bit about what that means. And then some of us were grandfathered in when there was all of the confusion in the last year. And now we want to know if we can find a better deal. So we're going to talk about that. Some of us are just now realizing, oh goodness, there's something I need to do in the next few months. And we're trying to figure out what that is. So we're looking to buy insurance under the Affordable Care Act. Some of us purchased a plan, but we're really confused about it. How do we even know if we purchased the right plan? We're going to talk about that. And then in some cases, some of us are kind of caught in this, what feels like the valley between ACA and our employer plan, and we're really trying to figure out the whether or not we should stay where we are or move, and it's just so confusing. And so Steve is here today to help us kind of understand the marketplace and to help us kind of answer some of these questions. So, Steve, let's start with a general overview of what Affordable Care and Affordable Care Act really means, as well as this name it's been given called Obamacare. So, walk us through, Steve, what Obamacare is.
Sure. Well, so Obamacare is basically a law that impacted the way that all. So good morning and thank you for the kind words, Terry. We'll just dive right in. Obamacare is a name that's been given to the healthcare reform law by the media and general public. They get interchanged, Affordable Care Act and Obamacare, but really they're essentially the same thing, and they affect basically the way that we all purchase health insurance. There are a whole number of things that it impacts, and we're going to kind of go through some of those today to simplify some of the complexity. But one of the big ones, and maybe one of the least popular elements of it, is that it adds a tax penalty for anyone who doesn't purchase what's considered a qualified health insurance plan under the law. There are some exemptions, and we'll talk about those later, but essentially we all have to have health insurance or we'll incur a penalty. So anyone that's uninsured right now in 2014, there's a chance, unless they qualified for one of the exemptions, that when you file your taxes coming up here soon, you will incur your first penalty under the law. Penalty small will be going up, but it is part of it. All individual health plans were affected by the Affordable Care Act. There aren't special plans called Obamacare plans. And I actually, as I'm out talking to people a lot, I'll have people say, you know, where do I get my Obamacare plan? Is it free? Is it cheap? Is it, especially if they've been, you know, maybe insured by an employer or something like that. There's this concept of there's a special place that you have to go to get the Obamacare plan, or that it's going to be free. And so we're going to go ahead and clear up some of that for everyone. But Obamacare is a law that affects every single insurance policy sold, and all of us that have to buy health insurance will receive a penalty.
So, Steve, if I heard you correctly, Obamacare and Affordable Care Act are the same. There is a tax penalty. This is one of the sticking subjects right now for anyone who doesn't purchase a qualified insurance plan. And all plans were impacted by the Affordable Care Act. There's not a special plan. There's not a special group of people. It really has impacted every citizen. Is that correct?
It's actually kind of both, and that's where people get confused. It affects every single plan. It affects all of us, and it's all under the Affordable Care Act and Obamacare, but everyone's impacted a little bit differently.
Got it. That's a very good distinction. Very good distinction. So tell us a little bit about premiums.
So premium of the Affordable Care Act plans have definitely increased significantly over the pre-ACA or Obamacare plans. And really the reason for that is before the law was passed, the way that and I'm going to talk specifically to individual purchase plans today because of the audience, but before the law was passed, there was medical underwriting. So someone had to buy a health insurance policy. It'd be based on their age. They'd have to fill out a health questionnaire. They may do a telephone interview, and the insurance company may even pull medical records. And then once they assessed all that information, they could say, we don't want to insure you. We want to insure you, but we're not going to cover your knee because you had knee surgery last year. And then there were certain things that they would not cover, like maternity. Well, again, this broad sweeping law changed the way the rates are determined, and we're going to talk about some of those things, but basically they're now guaranteed issue. So everyone, if you apply during the open enrollment period, or everyone gets accepted regardless of health. Everyone's ailments are going to be covered, so the knee exclusion doesn't happen anymore. And there's requirements of the law also that certain things have to be covered that used to not be covered, such as maternity, which you might be a single male and say, well, why am I paying for maternity insurance? It's going to be hard for me to get pregnant. That's part of the law and part of the plan. So those are things that are built in to the plans, which has, again, caused for a dramatic increase in the rates.
So rates are definitely impacted. I hear something about a subsidy. What's the subsidy?
So government basically allows for a subsidy to help lower the cost of health insurance for certain individuals, and it depends on income and family size, and then of course it also has a little bit to do with, well, those are the two main elements. You're not required to take a subsidy, even if you qualify for one, and so that's something that I've actually been fascinated by and really have enjoyed working. We have clients and other people that I've met with that really believe in voting with their pocketbooks, and even though they may qualify for a subsidy, they say, I'm not taking one, period. I don't want anything to do with it. I'm by my own premium. I'll figure out a way. Other people, they have, okay, well, it's, I'm okay, but at a certain point, I need, these premiums are so high, I'll take the subsidy. And so on our part, there's really no judgment. I mean, everyone's, entitled to do and act as they believe, but the most important thing is just because you qualify for a subsidy doesn't mean you have to take one.
And that's something, I think that's one of the reasons why I've really enjoyed working with you and your team is you guys can help me make those decisions. And so everything is kind of a pro and con, like there's lots of little decisions to make. And one of the decision areas is whether or not I buy it on this thing called the exchange or whether or not I don't buy it on this thing called the exchange. Can you help us understand what this marketplace is and this word exchange and really what the differences are?
Sure. Well, as if insurance doesn't make things confusing, as if our industry doesn't make things confusing enough with all the terms like deductibles and coinsurance and probably 5 that I've already used on this on this call or on this webinar. We've now added some new terms that are like government terms that also add to confusion. So, and then we have multiple words that mean the same thing. So the insurance exchange, as it was initially called, and then the marketplace are essentially the same thing. There was basically, they started with it being an exchange. A bunch of really smart insurance agents, entrepreneurs, other people went out and bought all the insurance exchange type websites, and so at the 11th hour they changed the title to marketplace so that they could communicate what they wanted to communicate through it. But basically they're the same place. They are the only place that you can receive a subsidy. If you're an individual and you're buying a health plan and you want to see if you can receive a subsidy, or if you qualified, more importantly, for the subsidy, you have to buy through this exchange or marketplace. You'll hear both terms. You can purchase through an agent or broker as long as they are certified through the Federal Facilitated Marketplace. And basically what that is it's a really, really boring, long training that we all had to go through. A number of our team members here at Alkali went through it. I went through it to learn about the marketplace. And so you have to be certified in order to work on the exchange. We want to serve people wherever they're at, and so we made the choice to be certified to work on and off the exchange or marketplace. One of the big sticking things that people that are kind of on the borderline that aren't necessarily wild about the exchange is something for consideration is that if you, even though an agent can help you, or you could even buy it direct, a policy direct from the insurance company, if you go through the exchange, all policy servicing must be handled by a navigator. And so that can be frustrating sometimes for someone that's used to getting maybe more personalized service through their agent, or being able to just call the insurance company directly. They act as an intermediary. The navigators do there.
So I think
and then
is a
go
really
ahead, I'm sorry.
Yeah, I think this is a really important point. So if I'm not working directly with my agent and they're helping guide me, then I'm kind of handed off to this other person that I don't have a relationship with, and it's their job to kind of move me through this, but I don't have a relationship with them and they may not understand my needs. Is that correct?
It's not quite that. So you can work with the agent that's been certified. Like I'll use Trina on our team. She could help someone with an individual policy, help them get signed up, help them go through that whole process. But then once the policy's active and they have a servicing issue, let's say they want to add a dependent to the policy, well, typically in Alcala, it's something we could help with or assist with. That would actually, we'd have to send them to the government website or give them the call center number for them to call and go and make those changes through the government. Where someone who's not receiving a subsidy, who purchased off exchange, which we'll talk about in a second, we could actually help with the process all the way through.
Got it.
So the consulting, the upfront part, we can help. It doesn't cost them a penny, to receive that advice or help. But then once it's active, servicing issues we can't be involved with.
Got it. That is very helpful. Thank you for clearing that up.
Or billing would be another one that, like, for example, that's put its head up last year because there were some complications with the subsidy from the government going to the insurance company and stuff like that. So that was another example. This last point here is also really important. If you're going to go through the exchange or the marketplace, Health and Human Services, they reserve the right to review your IRS records annually to redetermine your subsidy. So if you receive a subsidy, and then let's say you went through this process last year, you received your subsidy. Well, this year, if you don't make changes, so you've added a dependent or your income has shifted, again, that could impact the amount of your subsidy. And we'll talk about that later, but I mean, you could potentially, receive too much subsidy or not get your max subsidy, and both of those can have consequences.
That's really helpful. And then tell me a little bit about the off exchange or the private.
Sure. So if you're off exchange or private, I mean, it's really a couple of things. So it's really feels a lot like business as usual, just with a different set of rates and a different approval process. It's still going to be guaranteed issue. It's going to be based on your age. It's not going to be based on your health, like we talked before. You can still purchase through an agent or broker. You can still be serviced through an agent or broker, or you can call if you've got a problem with your Blue Cross or your Aetna or whatever. You can call the company directly and get help directly from the insurance company. And the other piece here, too, third point, I'm not sure, it's not showing up on mine, is that there's no additional government involvement. And what I mean by additional, I've got it underlined there. There it is that, like I said before, the Affordable Care Act law impacts every insurance policy sold. And so you're not involved with the exchange or the money or subsidies, and you don't have to worry about the re-upping every year, but your policy was still impacted. So it's the least amount of government involvement. And kind of an illustration I draw there is we bought our house in a way to think about this Affordable Care Act and the way it affects the policies themselves. We bought our house in 2007. I think it was 2007. My wife could tell you for sure. but when everything was kind of we bought out of foreclosure when everything was at a lull, and a bunch of our neighborhood was not. The development just stopped. And so the homeowners association got very, very lax in what they would allow within the neighborhood. And once things started getting going again, not only did they start enforcing the rules more, now that development's really going, I've seen them even step up some of the rules. And so some of the houses that were in place before, they, still, I guess, somewhat are grandfathered, but the new houses, the new people that are moving in, and then even some of the existing, the rules are tighter. So all these policies fall under the new, more stringent rules of the Affordable Care Act in regards to what's in the policies.
Wow. So So I think a big decision that folks have to make is whether or not they're going to be on exchange or off exchange, and it's not necessarily an easy decision. It's very much an individual decision. Is that a fair assessment?
It's an individual decision, but then it's also a decision of your circumstances because, I mean, you can go either one regardless of your income and regardless of your number of dependents. But essentially, if you fall somewhere between 166 and 400% of federal poverty guidelines, then again, the only place you can get any kind of subsidy is through the exchange. And so that would be, I mean, if you know you earn well above that, and we're going to be sending a do-it-yourself guide I'll talk about later, but if you know you fall well above that, then you can still look on and off the exchange, but the subsidy doesn't play in as much. So if you think you may want or may need a subsidy, that would be the thing that would maybe steer you in that direction a little bit more.
That makes total sense. And then talk a little bit about the actual plans included.
Yeah, and so this kind of is a reference back to what I said. So previously, so the plans, they had this idea that to simplify complexity for consumers, they were going to put plans into metallic tiers: bronze, silver, gold, and platinum. And actuarially, you know, by a really smart math person, they were going to overall cover similar levels of benefits, and that would be a standard for comparison to make it easier for consumers to compare policies between insurance companies. That, and we'll talk about that, isn't necessarily the case. There's some pitfalls by just looking at the different metallic tiers. But the other piece is that the biggest piece change is the medical history not being a factor in determining rates anymore. So age, zip code, and tobacco use are really the drivers of health premium, and so that's what determines your rate. And then what's in the policies overall, they have to have coverage of government-defined essential benefits, and you have a list there below, and that's where I'd mentioned like maternity and newborn care and some of those things that are maybe benefits that weren't covered by your plan before, which again is driving to some of the cost increases.
And then what about, I'm sorry.
I'm sorry. No, I was going to say, if you've been insured, if anyone's ever been insured by an employer plan or like a, you know, the plan's benefits are very similar. It used to be that individual policies were much less expensive than what employers were paying for in total cost. A lot of times the employees didn't realize it because the employer was paying for, subsidizing a lot of the cost. But now, without any employer subsidy, individual plans are much closer in price and cost to employer group benefits plans that employers have been paying for years. And similar in coverage as well.
Okay. And then what about hardship exemptions?
Well, hardship exemptions, sorry, this is like a really cheesy pun, but they're hard. They're hard to get. There's a whole list of them. You have to go to healthcare.gov. There are things like if you were, you know, homeless, evicted, facing foreclosure. There's, you know, a list of 14 different ones. Each of them have really specific documentation you have to do. You have to provide in order to qualify, but you have to apply through the exchange. And what the hardship exemption really basically does is it prevents you from receiving the penalty if you couldn't buy the health insurance by an acceptable government hardship exemption. So, like I said, there's kind of too many to list, but the cost one is if the health insurance plan costs more than 8% of your modified adjusted gross income, you could be exempt from having to pay a penalty if you don't buy the health insurance.
Awesome, thank you. And then this is, I know, a question that I had. I got this, you know, odd letter. So talk to us a little bit about my policy being non-renewed and what on earth that means.
Right. So if you received a letter, basically there was a promise when the law was going into effect that you could keep your plan if you already had one. And there's been a whole bunch of iterations since then where people have been able to keep and not keep. But if you got the letter, you basically bought your policy on or after March 23rd, 2010, when the law was signed by President Obama, and then then you have not made any significant changes to your policy since that time. So you've not, a lot of the major provisions of the law, like guaranteed issue, guaranteed acceptance, etc., went into effect January 1st of 2014. And so if you had bought this policy in between March 23rd, 2010 and January 1st, 2014, you have within the industry what they call not a grandfathered plan, but a grandmothered plan. And grandmother doesn't get treated as well as grandfathered, I guess. And so those policies ultimately had to go in and start basically catching up with the regulations. And so Aetna and Blue Cross in particular, two big players in the individual space, have decided to non-renew those policies and push everybody into the new plans and policies. So if you receive that letter, basically what does that mean to you? It means that you're required by law to purchase a new Affordable Care Act qualified health plan before the year is over to avoid a lapse. You can buy it in a number of places. I mean, you could go to your employer plan, maybe you qualify for your employer plan, you've been on an individual plan. You could buy another individual plan. But basically, if you go more than 90 days without a qualified health insurance plan, you could incur a 2% tax penalty of your modified adjusted gross income unless you qualified for one of those hardship exemptions we just talked about. You're not required, again, to go through healthcare.gov or even stay with your current insurance company. I mean, all the companies are going to try to provide options. I know Blue Cross has options where you can go directly, you know, stay Blue and go from one Blue to another. Aetna's trying to do the same thing. But you don't have to. You do have options. You can look and see which one's going to make the most sense for you.
And then this grandfathered, I love the grandfather, grandmother, and my grandfather did get preferential treatment. So what if I'm grandfathered?
Right. So basically, grandfather just means you purchased the policy before the law went into effect, and you haven't made significant changes. So that is what the grandfathering means. That was the promise that, hey, if you want to keep your policy, you can. And so those policies were purchased under all the old rules and regulations, and they've been able to stay in effect. By and large, most of the insurance companies, it's at their option to maintain their grandfathered policies. So even though the law says they can, some of the insurance companies have decided that it's not efficient for them to maintain two blocks of business and basically have to operate the old way and the new way. And so some of them have canceled, but those of you that still have a grandfathered plan, you probably have noticed that your rates are going up, and they've gone up. I mean, health rates, unfortunately, are always going up. They've started on the grandfather plans. We've noticed bigger increases this year. And the big thing, the reason why that's happening is no new lifeblood, no new policies can be sold into this grandfathered book of business. And so what happens with insurance is when rates go up or people's situation changes, maybe they get a new job, they don't need their individual policy, they and their new employer offers health insurance to them, they may leave and give up their grandfathered plan. Well, what happens is the pool of all those old grandfathered plans gets smaller and smaller. You have less premiums to absorb, claims, et cetera, because you can't sell grandfathered plans anymore. They're just the old block of business. So as it gets smaller and smaller and people get older and get sicker within that pool, you start seeing bigger increases. So if you have the grandfather and you're still one of the lucky few to be able to keep it, it sounds great, but really what happens is it's a math exercise. The things you have to consider if you're grandfathered is if you had one of those old policies and you went through the underwriting and everything else and your rates going up, are the rates better or worse than what you can buy now on the market. And so it becomes a math exercise. And then the other consideration, because they were written the old way, you might be one of those lucky or unlucky individuals, that had, an exclusion rider put on a specific medical condition. We're not going to cover your knee because you had knee surgery, and maybe you want your knee covered. And so that would be the other thing that you'd want to consider. Maybe it's worth making the change now to one of the laws, not necessarily to the exchange, but just buying a new policy. But ultimately it becomes down to math and then whether or not those exclusions are worth it. One of the things it says here is that there's carriers can look at your past medical history. Again, so that's just a reference to if you bought the policy before March 23rd, 2010, and it's grandfathered, you had to go through that underwriting process. And so rates are determined based on the claims of that block of business.
And then what about if I'm a first timer?
So there's lots of those. There's lots of people that are kind of having to make some of these choices because unfortunately people have life changes, marriage, divorce, stuff like that, but also a lot of small, we consult with a lot of businesses, and a lot of businesses have been impacted by the law. Small employers in particular, the way their rates were structured have changed too, and so they're seeing increases. They're passing those increases along to their employees, and so now people are really saying, okay, do I want to be on my employment plan? Do I not? So if it's your first time looking at it, it can be kind of confusing, but there definitely is hope. And I'm going to talk through a couple of things which you need to consider on the next slide here when you're looking. If we can switch to, there we go. So basically the things that you need to be thinking about, and this is really anyone who's considering buying a policy now, but if you're first time going through this, just some handles to hold on to. If you've always had your insurance provided somewhere else, maybe by your parents or something like that, a low deductible typically means higher premium. So there's a kind of an inverse relationship. So the lower the deductible, typically the better the coverage, the higher the premium. And the inverse is true as well. So when you think about your health, you also want to think about how do you use your plan currently. And this is where I was talking earlier. Don't just buy on a certain type of tier. Don't just say, oh, I have a lot of health issues, I'm going to buy a gold plan, because not all gold plans cover the same. Some plans are going to have labs, x-rays, prescriptions, maybe like a name brand prescription where you have to meet your health plan's deductible before they're covered. Other ones may cover those things under a copay. And so depending on how you use your plan and depending on your personal budgeting ability, you may want to pay, some people may want to pay a little bit more for their premium, knowing that they have a high dollar prescription and that it would be a really it would be a more difficult hardship to come up with a big deductible right off the bat to meet their prescription needs. So consider how you're actually using the plan, because that will help determine what types of plans you want to look at. Can you work with a limited network of doctors? This is a really, really big one. The law created all kinds of rules, back to the homeowners situation, the HOA. I mean, they have all kinds of rules that these policies have to meet certain coverage requirements, but there are no network requirements. And so we've seen a number of people, if anyone was shocked last year or upset last year, one of the big things is if they did it themselves, it was because they didn't look at the network. They said something like, I'm with Aetna at my employer, or I'm with Blue Cross at my employer, so I'll buy this Blue Cross plan or this Aetna plan, and I'm going to keep all my same doctors. That is not the case. They have plans, certain plans, not all of them, have very limited networks of doctors. And so recently I was talking to someone who took, the lower cost premium and bought the limited network of doctors, and they had to go all the way from Corinth to DeSoto to see a podiatrist, and because they needed to get in quickly, and there was just such a limited network, and all the other doctors couldn't get in, so they didn't have as much choice. And so if that's important to you, if keeping your doctors is important to you, or having a broad network when something does happen, that is something that is easily missed if you're not checking, because just because it's the same insurance company does not mean it's the same network. Are you open to buying from the exchange to save money? Again, we've seen that all over the board. We have people that are like, nope, I'm not taking excuse me, not a penalty. I'm not taking a subsidy no matter what. And then we have people that we work with that are like, okay, I'm not going to, and then they saw what they qualified for, and it was hundreds of dollars a month. They said, okay, I'll take it. And again, no judgment on that, but everyone's got that personal internal clock or guide, and I call it the Holy Spirit, but there's something inside them that tells them what's right for them. And then just if you funnel through these questions, you're going to be, and if you consider them when you're evaluating policies, you're going to be in a much better place and less likely to make one of the mistakes.
And so, Steve, I think if I heard you correctly, the really thinking about the deductible versus the premium is kind of choice or decision point number one. And then secondly is how do I use my plan, and for what do I use it for? That's kind of the next. And then from there, can I work with a limited number of doctors and hospitals, is kind of next. And then finally, am I open to buying from the exchange? Yes or no. And it's better to save that last question until you've thought through the others. Is that correct?
That's correct, because all the other ones apply on and off the exchange, and then the last one's like, so where do I want to go to start looking? And
then what about those of us who purchased a plan and now we're just confused? And there's a lot of confusion right now. And I thought I'm a fairly intelligent person. I thought I was following this, but boy, it's really become very convoluted.
Sure. So, I mean, you're not alone. I mean, so there have been, this law has been evolving. There have been a number of executive orders. There have been a number of changes. It is the most emotional thing that I've worked with through my entire career in regards to, I mean, it's just very, very charged. There's lots of information, lots of opinion out there, and sometimes you can't tell the difference. So it's very easy to get confused. And then as soon as something you think is pinned down, something changes. We are in constant learning mode here. And so first of all, don't beat yourself up, because even some of the experts I mean, it's changing. But you have kind of your second chance here. If you bought a plan, maybe you're having a life-changing event, or it's open enrollment time again, and you're not necessarily sure or excited about what you got, now's the time to make the changes with this current open enrollment period. Again, your subsidies are going to automatically renew, and so one of the big things we recommend is that you resubmit your subsidy application if you do have a subsidy, because again, you don't want to get to the end and maybe had a large income increase, or added maybe one of your dependents went off and became their own, they're no longer your dependent, and you receive a subsidy. You could owe money at the end of the year, or the opposite of that is maybe you reduced your hours or had another dependent or something like that. That could impact what your subsidy is. And then also, maybe you were one of the people that bought a plan with a very limited network, and so maybe you're not pleased with that, or want to maybe take another shot at it. Again, now is your time to do it. And so kind of continuing on with that, your health plan, most likely, if you bought it last year, is most likely going to automatically renew as well. Your premiums, no matter what anybody says, Affordable Care Act, Obamacare, rising cost of health insurance is a problem. It is continuing to go up. So don't be surprised when you get your renewal. Unfortunately, health, it's the worst part of what we do, is every year, year over year, despite our best work, health insurance premiums tend to go up every year. And so if your subsidy stays the same because you don't resubmit, I already mentioned this piece, is you could end up either owing or you could be paying more. Usually people that owe are the ones that are going to be the most upset. But again, this is the only time you can change your plan. And if you are considering going, to make a major change, the open enrollment period is November 15th to February 15th. But I do want to kind of use this as a point for everyone, that's listening, maybe your friends, family, whoever. One of the big things that we've dealt with this year as we've been helping people is we've been shocked by despite the amount of information, the number of people who did not buy a policy last year during open enrollment. And so with the law, what happened was they wanted the insurance companies to insure everybody regardless of health. Well, the insurance company said, okay, we'll insure everybody regardless of health and won't charge them more based on their health, but we want everyone to have a penalty because we want to make sure that we get the healthy and the sick, so everyone has to buy the policy. So that's one of the big elements of it. And then they also said we don't want people to be able to just sign up whenever they want, which is why we now have open enrollment. And so the problem I was alluding to, and I'm just getting to it now, is basically a number of people didn't realize that last year. And so throughout the year, people have called us and they said, hey, I want to buy an individual policy. And they don't realize that they can't buy a qualified insurance policy outside of open enrollment unless they had a special qualifying event, meaning they lost coverage to their employer, lost some sort of life change that allowed them to do it. And so if you don't take care of it now, you can't do it in the middle of the year. You could buy a short-term medical policy, but you are going to receive the penalty, and the short-term medical policies are extremely limited. So if you want to make a change, make it now. And for your friends and family that maybe aren't aware of this big thing, it can be really costly if you try to buy it when you need it later on and you can't.
Wow, that is really good to know. And one of the other questions I know as a small business owner, obviously the Affordable Care Act had a huge impact on my business. And how does an employee know whether or not they should stay on their employer sponsored plan or do something else?
The most important thing, health premiums are going up. Even for small employers, the way that their rates were determined have also changed. And so, unfortunately, more and more cost is being shifted to employees. And so when the cost goes up, the key is really looking in the market to see if you're better off on your employer plan or not. So you have to do a little bit of homework. But I will save everybody a lot of time. If your employer's plan does not renew between November 15th and February 5th, during this period of open enrollment, and let's say you're already locked in the plan, and let's say it renews in like May or June, you may not be able to drop your employer plan to purchase during the open enrollment, because if you're pre-taxing it, the plan may lock you in till your next open enrollment with your employer. Well, the problem with that is if that's the case and you can't drop your employer's plan until the next open enrollment, dropping voluntarily your employer's plan is not considered a special enrollment event. And so you can't just drop your employer's plan at the next open enrollment and then go look on the marketplace at that time. You'll be kind of stuck in your employer's plan. So if that's the case, you want to talk to your employer about maybe moving your enrollment period to align with the date. But for everybody else, which is probably 85% of the people out there, maybe 90 now, most people's enrollment for their company plans is between the November 15th and February 15th dates. And so if that's the case, all the considerations we talked about, you just want to take that in. You'll have to look at the math and see where you're better off. Chances are if your employer is contributing towards your premium, chances are low that you'll receive a subsidy. So you'll just be comparing cost to cost. So
there is a lot to consider in this area.
There is. If you're not in November 15th to February 15th, though, there's probably not much you can do for yourself. Um, and so that's kind of the unfortunate part. But if your company plan does renew during this time, it's definitely worth looking into, and then it becomes a math exercise.
That makes sense. So, Steve, kind of summarize, and then we'll talk about next steps of kind of where we're going to go with this information from here. Kind of help us understand, give us some good guidelines. I think we've titled this kind of what not to do, because there's so many things that we have to do, but you're going to kind of help us look at it another way. What shouldn't we do?
So first off, we have keep calm and shine on. And I don't even know if this is a true reference or not, but I heard that keep calm and carry on, the shirt that I saw had to do with England and being, in a war with Nazi Germany and the bombing, and they were trying to continue people to keep going on with their life and staying calm and moving forward. And so what we try to tell people is, try not to panic. I know that for some people this is very, very bad news. But if you panic, a lot of times you can overlook something and make a bad decision. Simply, example, like I mentioned, or just going, well, this is the lowest price gold plan, and I'm going to take it, not realizing maybe that it has a very limited network, and then that creates other problems for you. The second one, don't procrastinate. The 15th of the month before the effective date is the deadline to submit an application. So even though we've been giving over and over the timeline for open enrollment, in order to have coverage for the first of a month, you have to apply by the 15th. And already this year, there have been so many technology issues, not as big of news as it was last year, but we're already the carriers are having technology issues. We've had exchange, and so the technology gremlins, like I said earlier, are alive and well. And so don't wait till the 15th to do it, or don't wait till the 31st thinking you're going to have coverage on the 1st. You don't want to procrastinate on this. Don't buy a plan based on price and metallic tier. I think I've beat that one to death. Don't do something just because someone tells you to, and that includes us too. Every person that's on the webinar today, we have created a simple 5-step do-it-yourself guide. They'll walk you through subsidy determination. We even make suggested plan recommendations based on specific health needs, based on how you use the plan. But and we even give handles in regards to how to sign up for a subsidy or for the plan. But do your own research, because it's going to be very general. Give you some really, really good handles. But you could have a specific situation that you might need some additional clarification on. And then last but definitely not least, don't go without help. A lot of people don't realize this, but it doesn't cost. If you go through the exchange, you go through the market, you go through whatever, if you talk to a good qualified agent, an alkali, whoever, that knows how to help, understands the law, knows how to walk you through it, knows how to research your specific issue and your specific coverage concern, it doesn't cost you more. And insurance is one of those weird things. I can't think of too many other things like this, that you can buy something and really not know if you got a good deal until you actually use the policy. And so it doesn't cost anything, so just make sure you talk to someone if you're needing help afterwards.
Very cool. And sorry, my screen popped off on that last slide. A couple of things I just want to say. We had a great attendance on the webinar here today. I just want to kind of talk through some of the things that Alkali has prepared for you. Number one, we will have a download copy of the recording of this webinar. Was our first attempt at doing that, and we're planning on having these on a very frequent basis. So feel free to stay tuned in for more information. But we will send you a copy of the recording if you request it. Secondly, the Alkali team has prepared a do-it-yourself guide. Very simple, kind of what I call Terry version. You've broken it down into very simple terms on on what steps to take and what things to consider. And so that will be made available as well. In addition, we've captured all of the questions that you've been typing into the text box, and we will be preparing a frequently asked questions summary of that. And that will do two things. One, we'll summarize the responses, the questions, and prepare responses for you, and try to help get all of those questions answered since the time for the webinar has expired. But in addition to that, that's going to help us make the next version of the webinar more informative. And so, Steve, you're truly one of the most inspirational leaders that I know, and I know you've had a very positive impact on my life and my business. Any kind of closing thoughts on, how to kind of get our minds and our hearts right with all of these changes so that we can make the best decisions for ourselves and our families, and kind of set aside, the aspects of it that are unsettling and disgruntling, and really kind of help chart our course as we move forward. So any kind of words of wisdom there?
Boy, that's a tough one. I would say that there are many, many things still at work, many, many things that will still probably be evolving. We're probably looking at a bumpy ride still ahead with healthcare and this whole healthcare reform thing. But if you stay engaged and make your best choice for today, at least you can put your family in the best place. And then as things evolve, we will continue to do our best to serve. It's not an easy task, but we consider it a privilege to do so.
And you guys have been just very helpful today in preparing this information. I want to thank everyone who participated in today's webinar. Again, we'll be contacting you to let you know how to download a recording of the presentation. We will also, Alcoa has prepared a do-it-yourself guide that we will make available, and then we'll also be preparing a frequently asked questions summary from the questions that were not answered on today's webinar. Steve, I just want to thank you and your team and your family for just making the world better and helping folks navigate this, including me and the employees in our company. And I just want to thank you for being a light during this period of confusion. And again, just thank you for your efforts in pulling this together and helping us navigate this wonderful thing called the insurance marketplace.
Well, thanks for hosting, Tara. Really appreciate it.
Awesome, everybody. Thanks so much for joining us. We'll be in touch and we'll provide this information to you. We're signing off.